Our presentation today is Guidance on Calculation Relationships in XBRL Financials. And our first speaker today will be Matthew Slavin. Matthew is IT Program Manager, the Department of Economic and Risk Analysis at the U.S. Securities and Exchange Commission. Matthew is a Technical Project Manager, and he is currently focused on data analysis and the use of structured data at the Commission. Our second speaker today will be Campbell Pryde. Campbell is President and CEO of XBRL US. Okay, and right now I'm going to turn it over to Matthew.
Thanks, Michelle. Hello, everyone, and thank you for joining us, and thanks to XBRL US for inviting me to participate in their webcast and to talk briefly about calculations, which were the subject of a recent Division of Corporation Finance Dear CFO letters. But before I do, I'm required to say that the Securities and Exchange Commission, as a matter of policy, disclaims responsibility for any private publication or statement by any of its employees. The views expressed herein are my own and do not necessarily reflect the views of the Commission or the author's colleagues upon the staff of the Commission. Now, I'd like to talk about the importance of having those calculations and provide an overview of the main requirement, and also provide additional clarity by answering a few questions that have been asked regarding this topic. So I'll start by saying, why are calculations important? Well, required calculation relationships in XBRL company taxonomies provide key information, and it shows the relationships between tag and amounts in how they add and subtract to each other. Now, in addition, the recalculations help to enhance data quality by providing vital context for interpretation of custom tags, and they help support company data continuity by helping to decrease the rate of incorrect amounts. Now, calculation analysis looked at a sample of the most recent XBRL exhibits as of that time, in particular the balance sheet, income statement, and cash flow statements that were either missing all required calculations or were missing a higher percentage of calculations for one or more of those statements. Now, when are calculations needed? The Edgar Filer Manual, Volume 2, Chapter 6, Sections 614 and 615 address calculation requirement specifics, including some certain exceptions and examples. And please see these sections for more details on the requirements. You can see the link on the slide here, or go to xbrl.c.gov. And as some have requested additional clarity regarding the requirement, I highly recommend reading the requirements and separate what is required in a taxonomy extension versus what's required in an in document, because they are different, and as long as they're satisfied, everything should be fine. But first, a quick note about calculation inconsistencies. Some have asked about the occurrence of calculation inconsistencies being a concern. Now, inconsistencies are not necessarily a concern, and in most cases, they're unavoidable. These calculation inconsistencies are in large part the result of the XBRL specification itself, which unfortunately cannot compensate for the absence of what I like to call summability across members of an axis or dimensions. And as a result, calculations are not always required or can be provided. Now to the main calculation requirement. Now, in the Edgar Filer Manual, item 6.15.2 states that if the original HTML, ASCII, or ASCII document shows two or more line items along with their net or total during or at the end of the required context period, and the instance contains corresponding numeric facts, then the DTS, or in this case, really the company taxonomy, of the instance must have an effective calculation relationship from the total element to each of the contributing line items. Now, let's break that down into what three things are needed in order to require a calculation relationship. First, two or more line items, and its net or total on the original HTML or ASCII document. Now, that is, if it's shown on the financial statements or the footnotes of the HTML filing, then it needs to be represented in XBRL. Secondly, they are reported during or at the end of a required context period. Now, a required context is one that represents the periods being reported on, and they have no dimensions. Now, in other words, for the calculations, we're talking about contexts that are either duration or instant and have the same end date as the required context. Anything outside those dates does not require a calculation. And thirdly, the instance document must contain corresponding numeric facts. Now, if there are no numeric facts, then no calculation is required. And if two or more of those facts exist, a total or net, then a calculation is required. So some additional clarifying information around 6.52. Point number 2 of the requirement, which says that they are reported during or at the end of a required context period, seems to be where some questions have been asked. And some of the questions we received are, if only some of the numeric facts exist for a calculation so that it is incomplete, are calculations required for those items that do exist? And the answer to that is yes. If those items are required numeric facts, the 3 requirements that we just went through, even if some of the items are incomplete, a calculation is still required for those items. Now, the other question that we received is, if some of the items present have numeric facts in different periods, is a calculation required for those items in the different periods? And the answer to that is no. So those items in context with earlier periods are not required. However, the other items, as I said, meet the 3 criteria, are still required to have a calculation. Now, another received is, if some of the items present have numeric facts in contexts that have dimensions, is a calculation required for those items? The answer to that is no. Some of the items present have facts in context with dimensions. A calculation is not required for those items. As I said, currently the XBRL specification doesn't allow us to sum across dimensions. But that being said, it's good practice to have calculations for the complete set of relationships among the line items reported for different periods or with dimensioned segments, even when it's not required. It's still what I'll call a good practice. Although not specifically required, these relationships can be helpful in understanding how the items relate to one another, even if they result in additional calculation inconsistencies that I mentioned earlier. So some filers benefit from following what I term the good practice of including calculation relationships where possible. Even though they're not only the ones I mentioned earlier are required, you can still provide a full set of calculations. Now, for example, to help detect potential issues like sign flips, some add numeric facts for any missing calculation results and then check for consistency. And then they take them out before submitting. So it's a sort of test process to check that everything exists or you have the right information that sums up. So even though you're not required to have all of these calculations, you can include them. And some folks have, before they submit, put some values in to check consistency. And then what they do is they mark with, say, a special footnote marker during preparation, so they're easier to keep track of, so that they're not left in the instance documents when submitting. So that's sort of one benefit of providing these. It helps when you're creating your XBRL to also validate the numbers that are there. Also, some XBRL creation and validation software packages provide very similar features to help detect potential issues when they're missing or inconsistent calculations. So that's something that we recommend, or using software that allows you to check that. So that's just 2 options. That really covers the requirement. And in closing, I hope that helps clarify some of the key points around calculation requirements and provide some insights into the Dear CFO calculation letters. Now, Campbell Pryde is going to talk and walk you through some examples, but hopefully will even clarify these questions even more. And he'll be able to answer questions and discuss best practices related to these requirements. That's all I have, and I appreciate very much your time. I'll pass it over to you, Campbell. Thanks.
Thank you, Matt. So I've just got a few examples here, and these examples have been taken from real-life filings that we're seeing coming into the SEC. And so what we've done here is just taken some information from the financial statements of a number of companies, just to give you an idea of some of the different places where we're seeing calculations have been missing or calculations have been provided, and just give you some examples of where it's appropriate. So in this first thing on the screen that you can see here, we've got the equity statement for a company, and they've got a number of disclosures here, and we're just highlighted with the numbers 1, 2, 3, 4 down the left-hand side where we'd expect calculations. And as Matt said earlier, around the 3 requirements, to make sure that if there's one or more items, 2 items included in the calculation, you want to provide a calc for it. If you've got, obviously they've got to have numbers reported. If there's no numbers reported, you don't need a calculation. And they've got to be in the required context. And in here you can see the totals. And let's just look at the first year, which is March 30th, 2014, and you've got 4 totals: 254 million or 254,000. I think these numbers are actually in millions. And then you've got a second one, which represents total equity before treasury stock. Then you have the treasury stock at cost, and that gives you a number of the total equity, which is equity before treasury, then the number after treasury, and then they've got adding back the non-controlling interest to give you a third total of total equity, and finally they've got a fourth total for total liabilities and equity. Now, one of the things that's interesting here, and this is where we get a lot of problems, we see we've got common shares, and we've got Class B common. So we've got 2 types of shares here, and they've got the totals. Now, one of the things that companies do when they're breaking these down, they will use dimensions to represent the numbers of 6845 and the numbers of 409. So there may actually not be a default value declared in the instance for those. So you've got to be careful of that to make sure that as Matt said earlier, that we include calculation for these, and let's just see what this company did. And this is an example of where there were some problems. So in their presentation link base, they've included all the components. You can see here we've picked up the 1, 2, 3. We haven't picked up the 4th calculation. I think that's pretty straightforward. There needs to be 4 calculations, and we can see what are the elements that have been represented in the presentation. In the case of this particular filer, there was only 1 calculation represented for the calculation number 3, and you can see that the stockholders' equity, here is missing, and that's basically including the treasury stock calculation. And you also have the children of that, which is the equity before treasury stock and non-controlling interests, which are the calculation for 1. So given that, we need to you've got to be careful about this to make sure you look at those requirements, make sure that you're including these calcs there. And one of the reasons someone's not going to put these in was these calculations, we go back to the original side, are not going to balance, because you can see the common Class A and B values are not going to be present in the balance sheet because they've been dimensionized by the class of stock axes. And you can see in this example here, you can see at the top, we've got an axis, which is the statement of class of stock axes, so they're clearly dimensionized it using this axis. So let's go to another example. And here's another example where we see companies with the Class A and the Class B. They've used class of stock axes, and we've got companies, and they're coming down and they're adding up these numbers together, and they get to the 18261. So we'd expect a calculation there, less the treasury stock. They've got a Class B share on these, and then we've got total stockholders' equity, then the total liabilities and stockholders' equity. So you've got facts for these. We've got 3 calculations, And you can see here in the presentation, once again, they've got the statement class of stock axes as well. And you can see there's on the left-hand side, there is a common class A member and a common class B member, and they've reported those values. But you can see on the top in the calculation, we've got two of the calcs represented, which match the presentations. One for the stockholders' equity before treasury stock. So we go back to the previous slide. So that's representing the 18261. They've included all of these components. Even though this class of common stock axes is dimensionalized, they have been included. Common stock value, as you can see here, has been included in the calculation. Now, this will give a calculation inconsistency for this company, but that's not an issue. You know, it's far worse if the company excludes the calculation from the calculation link base in their return. And then finally, we've got another example. This is a partner's capital example, and this is just a very simple example, you know, and this is probably what's going to apply for most companies. Is you've just got this case here where you've got the company and they've got total liabilities, they've got and then they've got a total for partner's capital excluding non-controlling interest. They've got two calculations here. There's one and the two. And this company, as opposed to the previous company, has included the calculations all in the one calculation tree. And both of these cases are okay. So you can see here we've got the partner's capital, and it kind of goes down in this hierarchy under the calculation link base. If we go back to the previous example, we can see this company here in the calculation link base has actually defined these as two separate calculations in two separate calculation trees. And that's fine too. You can do either. You know, it's probably easier for readability and maintainability to keep it in a single hierarchy, but you can take both methods on that. So going back to this example, and then so those calculations are defined, and obviously you can see on the right hand side the weights are included, and all these values are adding up to the aggregate total. So basically, in summary, I think as Matt mentioned earlier, sometimes you're going to get down to if the value is dimensionalized, do I have to include it? So you're going to have some cases, and there's a number of companies where we know this, particularly in the utility industry, where they may be dimensionalizing all the company financials with legal entity axes, or particularly in footnotes, where you're using a lot of dimensions, and you're going to have calculations that are defined, but all the values in those calculations are, you know, none of them are included in the required context. Technically, you don't need a calculation in those cases. But, you know, rather than going down and trying to make the decision, do I need a calculation for this because the facts that I'm reporting are using a dimension, not using the required context. So in this case, I'm not going to use a calculation. In this case, I am going to use a calculation. In a lot of ways, it's just safer to say, look, I've got these elements, I've got them, you know, I know I've got a calculation here, but the value is dimensionally qualified. Should I or should I not put a calculation relationship on it? It's just easier to put the calculation on. And there's been reluctance to do that in the past, we think, because of people drawing attention to the calculation inconsistencies. And I just want to make, to reiterate on this, calculation inconsistencies are not an issue. It's far worse to miss a calculation when you should have one. And as you can see from this first example, this was a large company. Let's get back to this. This is a large company, and we just have a basic case where a company is basically just missing off the calculation altogether. So, okay, so we had a couple of questions that have come in on this. So the first one said is we had. We added calculations, sums, and assertions, but it resulted in an increase of XBRL warnings. This is okay. Is there a way to reduce these warnings? Yes, this is okay. If you have calculation consistencies, that's totally okay. But you want to look at the reason why you have them. Obviously, if you've got all the components for a calculation and there's a calculation inconsistency, then that's a problem. But if you're going through and you know that there's a component of the calculations are using a dimension, or you've got a missing component to the calculation for whatever reason, then that's not a problem. And to some extent, it's a matter of just quickly looking at them and making sure that you're okay with them in that particular instance. Someone's also asked. How can you include both common stock lines in the calculation? I've had it come up as an error because it will not let the same concept be used twice in a calculation. So in this case, you've got common stock. You've got two lines, but they've been broken down by different classes of stock. And in all these examples that we've just shown, what the company has done is they use the class of stock axes. So you have one element, the common stock element, and then it's broken up across two dimensions. That value is basically disaggregated into class A and the class B. And then a lot of, you may have an aggregate total. Most companies don't. If you do, you're not going to have a calculation inconsistency, but if you don't, you will. So the way to do that is to basically use the class of stock axes to disaggregate the common stock into the two components. Next question we had was, would you please be able to explain how the calculations play into how the users of XBRL data view the data? What issues does it cause to a user of XBRL if the calculations are missing? This is actually a really good question. Missing calculations can become a bit of a problem. One of the things that many folks who are starting to use the data do is they'll use the calculation relationships to determine if they're double counting items or not. In a lot of cases, XBRL offers a lot of granularity in terms of the data that can be reported. So if someone or an analyst or some user of the data wants to pull out a number like revenues, for example, there's a lot of different tags that they can use for revenues, and a lot of different companies report a lot of different components of revenues. And so if I'm going to go out and pull revenues, obviously I want to go and say, hey, can you give me the value for revenues and pull the revenue tag? And that would be fine. However, in other cases, there may be a number of components because they haven't reported the aggregate total. They break it down. And when they define these calculations between these elements, then these type of revenues are included in this other revenue number. You can look at the calculations and make sure you don't double count. Don't double count things. So in the case of shareholders' equity, sometimes we see companies they'll group different classes of equity together. If you don't have the calculation there, let's say there are combining retained earnings and APIC, which we've seen, you kind of want to know that these two things are combining it. Or APIC is included in retained earnings, so you can separate it out. So it provides a map to the data of the user to see what actually are the components of this data. Whereas if the calculations are not provided, you just get the number and the value. You can't see what are the pieces that are necessarily making it up, and you can't rely on the presentation because in some extent the presentation is just a way to present the data on a form. And then we had another question. So if I've got a single line item which represents a total, but it's only that total, let's say revenues, but those revenues are split across different segments. How do I need to provide a calculation for that? And the answer for that is, if the broad answer is, if there's something that's if the facts are not in the required context, i.e., it doesn't have any dimensions on it, then you don't have to provide a calculation. And we'll see this very commonly in things like reporting and business segments, where you'll have a calculation maybe giving the total of revenues, but then for the business segments, you've got all the different business segments. You don't have to try and build a calculation to say, hey, all these business segments add together and minus this consolidation. And the reason for that is because you basically got the one line item which is being disaggregated across all those members. There's no real way for you to define a calculation for them. And that's why, as part of the EGA filing manual, it actually specifically talks about this case. And then we have another question here. Is a calculation required if line items sum up under a given domain member, i.e. they're all in the same context? So this is a good question because there's been a bit of confusion around this. If you've got a number which is a total, but they're all under a given member, which is in a given dimension, and none of those numbers are in the required context, then you don't have to provide a calculation. So this is quite common, particularly in the footnotes. Let's take the pension footnote, for example. If there's a calculation in there which is adding up numbers across a particular pension plan, technically you don't have to put a calculation in for it. If there's a sum of the total and all the total values across all your pension plans without being dimensionalized by a pension plan or being broken up by individual pension plans, then you do. So this is something to be careful of, and to some extent, it's probably best practice or better and even easier just to provide the calculation anyway, rather than trying to work out if, do I need a calculation for this required context or do I not? Because in subsequent filings, are you really going to go back and review your calculations? Because what may happen is you may have facts that are then additional facts that are reported that are not on the domain. So I think that's a pretty good question, and then you avoid these situations where you calculate whether you define a calculation or not is dependent on what the facts are that you've reported in the instance. Okay, so we have another question. When you have a beginning and ending balance, for example, in the equity statement with the same tag, and Matt, jump in. I'm kind of taking these questions because they're always coming in, but if you want to jump in, feel free to jump in on any of these. When you have a beginning and ending balance, for example, in the equity statement with the same tag, so this is the case where you can have shareholders' equity opening balance and shareholders' equity ending balance. It's the same item. And items in between that get you from the beginning to the ending balance, i.e. the net income, the comprehensive income, share purchase, etc. Do you have to provide a calculation? And the answer to this is no. If you are adding up numbers if you're taking numbers which start with an instant or a point in time, like any balance that you'd see on the balance sheet, or typically what's in a roll forward, you don't have to provide a calculation for that, unless there is a total at the bottom of the roll forward representing the increase or the decrease in that account. So a good example where this is the case is in the cash flow statement, where you have an increase and decrease in cash for the period. You have to provide a calculation for that increase decrease in the cash flow. So you need to put a calculation for that. So that's kind of the one exception to that, is that if you do have an aggregate total, which is totaling all the flows during the period between the opening and closing balance, then you are going to need to provide a calculation. But if you have another roll forward, for example, a provision for doubtful accounts roll forward, and there is no subtotal representing the increase and decrease, or representing the change in the balance during the period, then you do not. Another question. Is there a link where we can find which companies the SEC studied? I presume no, Matt, unless there is. Matt, I think Matt got muted. I think it was a no. Okay, so then we have Okay, so in a roll forward table, calculation is not required, and that's correct. But some companies will have the line items immediately below the line with the period end label that is a calculation relationship. Like for example, a roll forward for obligations, whereby at the end they have this line item separating current and non-current obligations. But if calculation is applied, either one need to use the period end label or total label. I'm not sure I understand the question, but I'll take a stab at it. Yeah, so this is where, you know, it's kind of a case, sounds like this is and I haven't seen this, but this is a case where you have something that looks like a calculation, but there's something in the middle of it which doesn't make it look like a calculation. You know, under the three criteria that Matt had mentioned earlier, this would look like you kind of want to have a roll forward for it. You want to have a calculation defined for it. And I think in those cases, it's really looking at the HTML and saying, is the intent of the HTML to show that I actually do have a calculation here. I am defining that these numbers add together to get to this number. And if that's the case, it's better to add a calculation. I don't think you really want to take into consideration, oh, this is going to represent a calculation inconsistency, so I'm not going to do it. I don't think that's something that should really be considered as part of the criteria. There's just one more question here, and this is some one we have. No, we've got two, which is pretty easy to answer. I have a revenue by segment at the total at the bottom of the table. All items have the same concept and distinguished by their axes and member. Do I need to have a calculation? So the answer for that is no. That's because, and the SEC guidance particularly speaks to this. This is where you've got one line item, it's just dimensionally qualified, be it business segments, be it legal entities, be it geographies. There's no real way for you to define a calculation. You can't have revenue equaling. There's no need to say revenue plus revenue adds into revenue. So there's no real way to define it in the XBRL, so you don't need to do that. Aside from the SEC, who else can see calculation assertions? Everybody, the entire public can see calculation assertions. Anyone can look at these. It's intended that anyone can look at them, so they're publicly available. Okay, so I think that's all we had time for, Michelle. So I'll hand it back over to Michelle, and she will go through some of the other things we're seeing. Thank you.
Thank you, Campbell, and thanks very much to our speakers, Matt Slavin from the SEC and Campbell Pryde from XBRL US. Thanks very much to all of you for dialing in with us today. There are a couple of things that I wanted to mention from XBRL US. And if you just take a look on your screen here, there are a couple of initiatives that we introduced just this week, actually, and one of them focuses on data quality tools that we're making available to filers. And this is it's a set of web pages that basically provide, as you can see on the left-hand navigation here, tools, analysis, and resources. We felt that there wasn't a single place where you could get a lot of comprehensive information about things like FASB guidance, XBRL US guidance, SEC guidance, essential information about XBRL. We've also included here analysis that shows some data quality issues and basically how they trend over time, looking at what we see as data quality problems that we see in filings on a company basis, not on a company basis, on a, from a size of company basis, for industries. So there's a lot of trend information here. And then the tools that we're making available to filers are basically tools that allow you to actually identify errors in your own filing. Just get a count of total errors in your filing, broken down by type of error, general categories of errors. All of this data is available. Tomorrow morning, we're going to send out a link to the replay for this event, and we'll also send you a link to the data quality tools that everyone can have access to. And our objective in doing this really is to help filers to create better quality data. We know that there's a minimal amount of effort involved in creating better quality data, and our goal is to help you get there. A couple of other things that I wanted to mention include information about our upcoming conference. Our conference this year, which is focused on SEC filers, takes place September 15th through 17th in Bellevue, Washington. And this conference, again, is very focused on best practice and training for SEC filers. And the focus is on helping you resolve, and basically get better at creating XBRL data so that you can avoid, some of the issues that we see in filings. We're going to have best practice training from the top accounting firms, Deloitte, Ernst & Young, KPMG, PwC, Parenti Beard, as well as a host of other individuals speaking and training during the program. And we're also going to provide insights into the use of corporate XBRL data. We have some keynote speakers from Microsoft and venture capitalists from Ignition Partners. And we want to thank our national conference sponsors, among them PwC, Deloitte, DataTrax, and the AICPA. And you can find out more by going to conference.xbrl.us. And then finally, I wanted to speak briefly about some other tools that are available to you, including the XBRL Consistency Suite, which is a set of over 15,000 data validation rules to identify errors, and they pick up issues such as missing calculations, which comprises about 2% of all errors, invalid access member combinations, which is one of the biggest problems that we're seeing in filings today at 23%, negative and positive input errors, which is actually a little bit higher than 18%, required values that are not reported, incorrect dates. So there are over 30 categories of potential issues, and the Consistency Suite is designed to provide a comprehensive, consistent check of certain types of errors. It won't catch every error in your filing, but it will catch many of them and help you create better quality data. And then finally, the last thing that I wanted to mention is the XBRL US GAAP Certificate Program, which is a program that we developed jointly with the AICPA. This is a program that offers over 40 hours, CPE hours of intensive online learning, and it covers everything from fundamentals of XBRL to individual statements and on to footnotes. So we'll send more information about all of these programs and initiatives to tomorrow, so watch for your email. And again, thanks very much for attending, and thanks to our speakers.